This protects both you and the financial institution. If an exchange can't be traced or documented, it's not part of the formal financial system. Now, let's look at how banks handle money exchange. Banks don't just improvise. They operate using predefined, highly controlled systems. Every transaction follows a strict process to minimize risk and ensure legality. First, the bank has to verify the currency itself. They check if the notes are authentic, recognized, and acceptable under current regulations. If your notes are damaged or questionable, they might be rejected or the process could be delayed. Second, banks verify your identity. This means showing legal identification and passing regulatory checks. This is a global requirement. It's not optional or negotiable. Finally, banks apply the system-approved exchange rate. These rates come directly from internal systems that are linked to live market data. This brings us to a common myth, that banks offer secret or special rates to certain people. This is completely false. Banks are some of the most heavily regulated institutions in the world. Offering a hidden rate would be a serious violation of both internal controls and financial law. If a bank employee even attempted to offer a private rate, it would trigger audits, internal investigations, and potentially criminal charges. If a bank employee even attempted to offer a private rate, it would trigger audits, internal investigations, and potentially criminal charges. Banks simply do not risk their operating licenses for individual transactions. What people often mistake for inside information is usually just routine system updates, staff training sessions, or internal policy reviews. These are signs of preparation, not secret opportunities. This framework exists to prevent illegal activities like money laundering and fraud. Every single exchange transaction is reviewed through this compliance lens. This is called source of funds verification, and it's a global standard. When you're dealing with a large exchange, it will automatically trigger additional reporting requirements. This is normal and expected. It doesn't mean you're under suspicion. It just means the system is working correctly to protect everyone. Many people assume a large currency exchange should be instant, but in reality, larger transactions require much more verification, review, and approval. This is because higher amounts increase the financial risk for everyone involved. To manage that risk, banks slow the process down. They don't speed it up. This protects the institution, and it protects you from errors and compliance violations. So, if you experience delays, don't see it as a sign of rejection. See it as a sign of careful, professional handling. It's crucial to understand the difference between a bank exchange and an unofficial exchange. A bank exchange is legal, regulated, and protected. It provides you with receipts, records, and legal standing. A bank exchange is legal, regulated, and protected. It provides you with receipts, records, and legal standing. If a problem ever comes up, there are established systems in place to resolve it. Too many people lose their savings because they prioritize speed over safety. Remember, real financial systems favor structure over shortcuts. Scammers use urgency, fear, and excitement to pressure people into making bad decisions. Some of the most common scams include fake bank emails, fake phone calls from supposed bank representatives, cloned websites that look real, and false invitations for exchange appointments. Some of the most common scams include fake bank emails, fake phone calls from supposed bank representatives, cloned websites that look real, and false invitations for exchange appointments. Some of the most common scams include fake bank emails, fake phone calls from supposed bank representatives, cloned websites that look real, and false invitations for exchange appointments. It involves understanding exactly what currency you hold, keeping meticulous records of how you got it, and storing it safely. It's also important to understand what money exchange does not mean. It does not mean instant wealth or guaranteed profit. Exchange rates move within controlled ranges and are influenced by complex economic conditions. Any claim suggesting you can bypass these things is completely misleading. Understanding these limitations is what protects you from unrealistic expectations and the emotional decisions that follow. This is why patience is a true financial advantage. Financial systems move deliberately. Major changes require careful coordination between institutions, regulators, and global markets. This process simply cannot be rushed. Patience allows you to observe actual patterns rather than just reacting to online noise. Most financial losses happen when people act emotionally instead of rationally. Being patient doesn't mean being passive. It means being prepared, but not being pressured. It is not secretive, chaotic, or rushed. Real opportunities will not pressure you into acting immediately. Real banks will not promise you shortcuts. And real financial change unfolds quietly and officially through proper channels. Here at Dinar Stories, our mission is to replace confusion with clarity. Stay informed, stay grounded, and protect yourself by understanding how the system truly works.